please subscribe to the channel. Hit the like button and leave a comment. Thank you. Part 1. Why start stock investing now? 1.1. Inflation is eating your money. Did you know that the $100 in your savings account today will be worth less in 10 years due to inflation? The average inflation rate in the America is around 2 to 3% per year. If your money isn't growing at least that fast, you're losing purchasing power. Stocks have historically outperformed inflation, with an average annual return of about 7 to 10% after inflation. 1.2. Compound interest is your best friend. The earlier you start investing, the more time your money has to grow through compound interest. 1.3. The stock market is more accessible than ever. Thanks to technology, you don't need to be a Wall Street expert to start investing. Apps like Robinhood, E-Trade, and Fidelity make it easy for beginners to buy and sell stocks with just a few clicks. Fractional shares allow you to invest in expensive stocks like Amazon or Tesla with as little as $1. 1.4. You're missing out on free money. If your employer offers a 401k match, not investing is like leaving free money on the table. For example, if your employer matches 50% of your contributions, up to 6% of your salary, that's an instant 50% return on your investment. Part 2. How to start stock investing, step by step. Step 1. Set clear financial goals. Before you invest a single dollar, ask yourself, why am I investing? Short-term goals, 1 to 3 years, saving for a vacation or a down payment on a car. Medium-term goals, 3 to 10 years, buying a house or starting a business. Long-term goals, 10 years retirement or building generational wealth. Your goals will determine your investment strategy. Step 2. Build an emergency fund. Before diving into stocks, make sure you have 3 to 6 months' worth of living expenses saved in a high-yield savings account. This ensures you won't need to sell your investments during a market downturn. Step 3. Choose the right brokerage account. A brokerage account is like a gateway to the stock market. Here are some popular options for beginners. Robinhood, great for beginners with no commission fees. Fidelity offers a wide range of investment options and excellent customer service. Vanguard, known for low-cost index funds and ETFs. Look for a platform with low fees, user-friendly tools, and educational resources. Step 4. Learn the basics of stocks. What is a stock? When you buy a stock, you're buying a small piece of a company. If the company does well, the value of your stock goes up. Key terms to know. Dividends, a portion of a company's profits paid to shareholders. Market cap, the total value of a company's outstanding shares. P/E ratio, a measure of a stock's price relative to its earnings. Step 5. Start with index funds or ETFs. If picking individual stocks feels overwhelming, start with index funds or ETFs, exchange-traded funds. Index funds track a specific market index, like the S&P 500. They're diversified and low-cost. ETFs similar to index funds but trade like stocks. Examples include SPY S&P 500 ETF and QQQ NASDAQ 100 ETF. These options are perfect for beginners because they offer instant diversification and lower risk. Step 6. Research individual stocks. Once you're comfortable, you can start investing in individual stocks. Here's how to research. Look for companies you understand. Start with brands you know and trust, like Apple, Coca-Cola, or Nike. Analyze financials. Check the company's revenue, earnings, and debt levels. Read the news, stay updated on industry trends and company announcements. Step 7. Diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different sectors: tech, healthcare, consumer goods to reduce risk. A well-diversified portfolio might include 50% in index funds or ETFs, 30% in individual stocks, 20% in bonds or other low-risk investments. Step 8. Invest regularly. Dollar cost averaging. Instead of trying to time the market, invest a fixed amount regularly, e.g. $100 every month. This strategy, called dollar cost averaging, reduces the impact of market volatility. Part 3. Common mistakes to avoid. 3.1. Trying to time the market. Even the experts can't predict market movements. Focus on long-term growth instead of short-term gains. 3.2. Letting emotions drive decisions. Fear and greed can lead to poor investment choices. Stick to your plan, even during market downturns. 3.3. Overlooking fees. High fees can eat into your returns. Choose low-cost funds and brokers. 3.4. Not doing your homework. Always research before investing. Don't buy a stock just because someone on Reddit said so. Part 4. Fun and creative ways to learn about investing. 4.1. Play stock market simulators. Apps like Investopedia Stock Simulator let you practice trading with virtual money. It's a risk-free way to learn. 4.2. Follow investing influencers. YouTube channels like Graham Stephan and Andre Geek offer entertaining and educational content on investing. 4.3. Read books and listen to podcasts. Recommended reads The Intelligent Investor by Benjamin Graham. A Random Walk Down Wall Street by Burton Malkiel. Podcasts The Motley Fool, We Study Billionaires. 4.4. Join online communities. Reddit's Rinvesting and RStocks are great places to ask questions and learn from others. Part 5. The psychological side of investing. 5.1. Patience is key. Investing is a marathon, not a sprint. Don't panic during market dips. Stay focused on your long-term goals. 5.2. Celebrate small wins. Did your portfolio grow by 5% this year? That's a win. Celebrate your progress and stay motivated. 5.3. Learn from mistakes. Everyone makes mistakes. The key is to learn from them and keep improving. Conclusion. Your journey starts now. Stock investing isn't just for the wealthy or the Wall Street. Elite, it's for anyone who wants to take control of their financial future. By starting now, you're giving yourself the best chance to grow your wealth and achieve your dreams. Remember, you don't need to be an expert to get started. Take it one step at a time. Stay curious and don't be afraid to ask questions. The stock market is waiting for you, and the possibilities are endless. So, what are you waiting for? Open that brokerage account, make your first investment, and start building the future you deserve. Happy investing! Please subscribe to the channel, hit the like button, and leave a comment. Thank you.